Ladies and gentlemen, good day and welcome to Steel Strips Wheels Limited Q2 and H1 FY26 earnings call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Dishant Jain from Anand Rathi. Thank you, and over to you, sir.
Thank you, Danish. Good afternoon, everyone. On behalf of Anand Rathi Research, I would like to welcome you all to the 2Q FY26 earnings conference call of Steel Strips Wheels Limited. Today, we have with us Mr. Mohan Joshi, Deputy Managing Director, Mr. Pranav Jain, DGM Finance, and Mr. Puneet Sharma, DGM Finance and Accounts. We start with a brief opening comments from the management team, post which we will have the floor open for Q&A. I'll hand over the call to the management team now. Over to you, sir.
Yeah, thanks. Good afternoon. Hope everyone is doing well. I hope everyone had an opportunity to go through the financial results and investor presentation, which we have uploaded on the stock exchange and on our company website. I would like to start the earnings call by introducing you all to the new CFO of our company, Mr. Rahul Kumar. He is a qualified chartered accountant and has passed level 3 of Chartered Financial Analyst, CFA. He has years of experience in finance, accounts, and commercial control. He has been associated with the company since 2022. Previously, he has worked in industries such as healthcare, technology, and edtech. Now, coming to our half-yearly performance, we reported a healthy top-line growth of approximate 13% during H1 FY26, reaching 2387 CR. Gross profit grew by a robust 10%, reflecting strong momentum. EBITDA stood at 234 CR, largely flat year-on-year. However, EBITDA margin witnessed some pressure, primarily due to lower export volume this quarter. Exports typically being among our higher margin segments. Profit after tax for the half year stood at 88 CR. The alloy wheel segment has been a standout performer this half, delivering exceptional growth and increasing its contribution to the total revenue to 36%. Volumes for the segment reached approximate 18 lakh units. We expect this upward trajectory to continue, and with its share in overall revenue likely to rise further in the coming quarters. The strong performance of alloy wheels has been instrumental in sustaining our overall business margin, and we remain confident about its continued growth and momentum. Our new aluminium knuckle segment has made an encouraging progress since its launch. In this half year, we sold around 1.24 lakh units, generating 33 CR in revenue. Capacity has already been scaled up to 3 lakh units per annum, and we plan to expand it further to 5 lakh units by this year end. Our goal is to fully commercialize this business line by FY26, bringing major OEMs into our customer base and establishing it as a meaningful contributor to the growth. On the export front, performance was subdued this quarter, with revenue declining to 111 CR, down by 26% year-on-year, primarily due to global uncertainties surrounding potential US tariffs. One of our key export markets. We are closely monitoring developments on this front to assess the implications. Meanwhile, we have increased our focus on European markets, where the contribution has risen to 52% of the total exports in this half year. We will continue expanding our footprints across Europe, neighboring regions to further diversify and de-risk our export portfolio. Looking ahead, we expect strong momentum in the domestic market, supported by recent GST reforms that are likely to boost consumption across the auto industry. On the export side, we will continue to evaluate the impact of tariffs while broadening our geographical reach to mitigate risk. With this, we now open the floor for question and answers. Thank you.
Thank you so much, sir. Ladies and gentlemen, we'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use headsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question comes from the line of Anand Kulkarni from Front Wave Research. Please go ahead, sir.
Thank you for the opportunity. Just a couple of questions from my end. First, being on your capacity addition plans, I see this trim down in steel wheels here. Does this refer to A&W auto components which is yet to be operational? So when do we expect it to be coming online? Any particular reason for delay?
As I've already said in my previous calls also, that the first intent of using A&W was to increase the capacity within our existing portfolio of the existing factories. So in that context, what we have done is that we have increased the capacity of our tractor segment by close to 40% over past 6 months, and that's why we are in a position to offer the best amount of tractor wheels to the industry with the help of equipment that we have taken from A&W. The second thing which is underway right now, and maybe another 1 or 2 months, capacity expansion in Jamshedpur will be done to add close to 500,000 wheels into the kitty of commercial vehicles to make sure that the economies of scale continues to be higher, and it's a place which is very strategic to customers as well as from raw material side. So we expect a little bit of margin improvement when these economies of scale fit into the operations in next financial year. At the same time, steel segment offers low volume growth in terms of the industry. So as and when this capacity will be needed, where the plans are already getting discussed with various segments of the business, I believe that over next quarter we will be in a better position to give you the steel wheel expansion and utilization of A&W.
Okay, understood. So my second question was on alloy wheel segment. We can see in your monthly updates the product mix is changing. Alloy wheels is doing way better than our steel wheels. Still, that is not reflecting in our EBITDA margins. So I'm trying to wrap my head around this. So what's happening with our EBITDA margins?
Okay, so as I said that in our case, EBITDA margins will not play a very significant role in terms of percentages because raw material keeps on changing. So as all of us know that aluminum prices are at record levels, and it has moved from a level of close to 225 rupees a kg to currently around about 265 to 270 rupees a kg. So it impacts the margin percentage. But from a per wheel basis, which we are trying to talk about, I think we have reached a level of 262 in last quarter, which was amongst the best. And in this quarter, we are at 242, wherein the impact of the US export fall in terms of sales was around close to 50 crores in terms of quarter 1 to quarter 2. Wherein we lost close to 8-9 crores in terms of our margins because of the loss of sales and higher cost of operations in those plants. And the level of 262 is fairly a decent level where we have achieved it over past 2 years, wherein we started with 185 odd levels to slowly and gradually hit the number of 262. And we are hoping that alloy wheel segment will continue to be the front runner. And once the situation of tariff, eases up with the current ongoing discussions with the government, I believe that we can scale back to those levels.
Okay, so a couple of more questions on this one. On the tariff, have we been able to pass down whatever the increased tariff has been, or like we have taken 100% hit of the same? And second one, if you can paint the picture around expansion in Europe, the subsidy that we were acquired. Any traction you are seeing, how much has been compensated later on our exports?
So I'll answer the second question first. So the European subsidiary, which is under consideration right now, is a trading arm only. It is nothing to do with manufacturing. So it is a customer demand that it serves from that country to them via the manufacturing is from India and supply to that subsidiary. So there is no margin impact or anything of that sort. The second thing, which is on the US tariff, I think the tariffs are fairly very, very stringent right now in terms of 53% to us, wherein it does not leave us any scope of negotiations if we want to do that business. because the incremental punishment for any importer in US is to the tune of maybe 24 to 25%. So even if we compensate by 4 or 5%, it doesn't make sense. So currently the US business is fairly dim, and the compensation is happening only from the European side. The alloy wheel segment exports are fairly doing good and ramping up. So we are expecting some bit of recovery from the export loss from the European side. On the US side, we don't see any possibility as of now where some compensation of price can get the business back because the penalty amount is very large. So in case we are into a situation where the penalty which is on account of the import of Russian oil, which is 25%, gets waived off, then India stands at close to 28% for us as an industry. At that point in time, we can think of getting into a negotiating space and try to see that if some bit of negotiation can be done on prices for starting the imports.
Okay, thank you for detailed clarification. Just to end on this note, any guideline if you want to give on EBITDA per wheel couple of years down the line, 2 years down the line?
See, over the years, I think when we started this aluminum factory was one of the reasons that we see the challenges in the steel wheel market. Being a sunset industry where alloy penetration is increasing in the PV segment, although in tractor and truck segment it remains stagnant and there is no scope of aluminum. Today, I'm proud to say that close to 35% plus of revenue is coming from aluminum business, which is higher accretive business. At the same time, aluminum knuckles is a start of the business where we see similar kind of trends coming in terms of the industry growth and penetration growth for us. So I believe that the erstwhile thought of 300 rupees a wheel is what the site is, but currently with the business challenges which we are facing and the export drop which is pushing up the cost a little bit, I anticipate that first reaching a 260, 265 levels is considered to be the first milestone. Then henceforth we are going to be moving towards that level that we have spoken.
Understood. Thank you so much and all the very best.
Thank you.
Thank you, sir. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our next question comes from the line of Shankar from Iraya Capital. Please go ahead.
Hello. Yeah. Hi. So, I wanted to ask around EBITDA per wheel. Can you give me a breakup of EBITDA per wheel for steel and alloy wheels separately? So, yeah, that's my first question.
So we don't do it separately ourselves, but yes, if the detailing of segment-wise can be spoken about, I think we can take it offline with SGA. But as a company, we don't do it separately because there are common functions and common portfolios. But yes, on request, I think we can discuss it offline with SGA with the help of our team.
Can you give me any ballpark range for that? Even like if you have any, we can
I'll try to give you a perspective in terms of percentages because we have never considered this as separate for per wheel of steel as well as aluminum, because in steel also there are 4 segments of the business. But typically what we have guided in past also that the domestic steel businesses are in the range of 8 to 9% in terms of EBITDA margins. The export steel businesses are in the range of 13, 14, 15% margins. In terms of aluminum wheels, the margin range between 11, 12, 13% with the increased prices, and the volume mix will play the percentages from that perspective. But as you know that the volume, the percentage is not a right benchmark to see it over a period of time, because raw material can change, and if tomorrow 20% drop in the raw material comes in, this margin of maybe 10% will look like 11.5%, which is not the right depiction.
Right.
So we will give you a perspective of per wheel kind of a concept if we take it offline. Will that be fine?
Yeah. So thanks.
Sure.
So just want to understand on the trajectory, as you stated that you look to target 265 and then 300 odd levels. So can you give any timelines as to what do you have in mind? When do you look to achieve those numbers?
So as the business grows, I think this year, as we had anticipated earlier, the top line remains committed towards 4,800 odd crores in terms of the figures which are looking like right now. wherein some bit of dent came in from the perspective of exports, but still we'll try to achieve that level. And over this period, the intent is that the capacity of 5 million alloy wheel capacity will hit close to 4.1 or 4.0 million or 4.2 million in this financial year. The expansion of capacities is also going to be happening mostly in and around alloy wheels and knuckles, which is the accretive business towards margins, as well as a future where lightweighting and aluminization is happening. So I believe that over the next 2-3 years is what I feel is the trend that we are anticipating towards this 300 rupees kind of an EBITDA per component that we can think of.
Understood. So next I wanted to ask around the volume growth. Can you give any guidance around what can be the volume growth we can expect for full year if current tariff situation remains the same? And similarly, what kind of EBITDA growth we can expect if tariff situation remains same?
See, what we had anticipated at the beginning of the year that there will be a 5 to 6% kind of a volume growth, which I feel that it is looking tough, and I think that will fall down around 2% or 3%, which is completely impacted by the fact of exports, wherein the question is out of syllabus right now, so I'll not be able to answer that. So 2 to 3% is what I think on a volume growth. In terms of EBITDA growth, I believe last year we did around about 490 odd crores kind of a number. I think we have done close to 235 right now. So there will be an impact of EBITDA if the situation remains same. And anywhere between 470 to 480 is what we are trying to think on a flattish year for this financial year.
Understood. What are the trends that you're seeing in November? Given we are already in November, what are the trends you're seeing in Q3 in terms of volume growth?
So what we feel from the domestic side, I think the GST side is still prevailing. I think the festive mood has been extended by the help of GST for all the segments. So I believe that two-wheeler where our exposure is less, but albeit industry is facing a lot of demand and it is a happy moment. PVs post the miraculous number which came in during the festive season. I think the outlook for next 3 to 5 months is visibly better. I believe that number is going to be between 6 to 8% higher to reach a number of 3 to 4% for an annual growth. On the tractor side, the segment is growing very, very good. This year, I think there is a possibility that for the full year, we may report anywhere between 8 to 9 to 10% kind of a volume growth. And for CVs, I think it's been very dull moment, despite having all the engines which are working for the economy. But I think that is something to do with the business sharing with railways or other segments where I feel that the volume growth is going to be maybe flattish or maybe 2% on the plus side.
Understood. Just last one, same on the EBITDA per wheel, I wanted to ask, given the historical trend that I'm seeing. So, what I have is, so we did around 250, we achieved 250 levels in FY23 itself, and from then we, as you said, in last quarter we did 260, but volumes have grown, but not per wheel, EBITDA per wheel has not grown materially as volumes have grown. Like any trend that you are seeing because of that is any reasons for that?
So I think when we compare it with that period of 250 in 2022-23, in that financial year, we have also indicated that there was a 55 to 65 crores worth of inventory gain because of the sharp rise in the raw materials. It was a one-off in that financial year because of which this 250 came in, and that got normalized in the financial year which was preceding. And since then, I think it's a slow and steady angle on towards higher side, towards where we reached 262 as the highest number last quarter. We would have reached that level given that the situation is out of our control, and we are trying to offset it by the European side of the business or transferring more and more in terms of the segments that we can offer to the European side to compensate.
Understood. Thanks. That's it.
Thank you.
Thank you, sir. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question comes from the line of Sakshi Pratlab from Pratlab Securities. Please go ahead.
Hello. Thanks for taking my question, sir. As I joined a little late on the call, apologies if anything is repeated. My first question is, export slowdown was cited as a major reason for margin compression. If exports normalize in coming quarters, what would be the likely margin recovery range that we'd look at?
So I have answered this question earlier, but I'll repeat it. I think we lost around 20 rupees per wheel kind of a margin in this quarter, which is amounting to between 8 to 9 crores, purely based on the volume drop which happened. In volume, in value terms, it was around 50 crores worth of export which got hit in Q2 versus Q1. And I anticipate that some solution will be found out. And I'm fairly hopeful between the governments that there's negotiation going on. But without negotiations and without the removal of the duty, which is penalty of 25%, I believe that it will be very tough to do business with US because those kind of margins are not there available in the business. And I mean, if it gets sorted in maybe next 2 months, I believe that Q4 will be better and we can get back to the margin profile of Q1 with better margins and better products at the same levels.
Understood, sir. Thanks for the explanation.
Okay.
Second question is on the aluminum knuckles segment, which is ramped up very quickly for us. So when do we expect it to reach break-even or contribute to our overall EBITDA?
So the segment is already, broken even. I think we are running at a pace of close to 0.3 million annual base capacity. And the capacity by this financial year end will be close to 0.5 million. And we are also augmenting a capacity expansion to add up another 500,000 where discussions with the customers are ongoing. And we anticipate with the order book which is visible to us to reach a level of close to 0.5 million kind of a capacity by Q4 end or Q1 of next financial year. I think the margin highlight also, I told you that once we reach to a certain stage, I think the mid-teens kind of a number is where the margin is standing right now. Although the value is less in terms of turnover, but the industry offers a similar kind of industry potential, the way that alloy wheel has taken up shape. So lightweighting and aluminization is the theme. And EVs anyways is going to be having this as a mandatory thing. But the penetration is towards the ICE engines where we anticipate some of the programs to be converting the steel forged knuckles to aluminum knuckle by next financial year of Q3. And similar trends are visible in the market. And I think it is going to be singing the same story the way that aluminum has played out for us.
Understood. Thank you so much, sir.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our next question comes from the line of Vignesh from Seema Wealth. Please go ahead.
Hi, am I audible?
Yes, please.
So just regarding the capacity utilization, now we are close to almost 75%, 70-80%. So by this year or next H1, we should be reaching around 80%. So after that, what's the plan for the capacity expansion, sir? Any idea like how much capacity are we putting in or any plan internally? Just want to understand on that.
So as I said that the capacity expansion will be only towards the aluminum segment of this business right now, wherein a large amount of money can be spent. Otherwise, internal capacity expansions, as I hinted towards the tractor segment and the CV segment, was done with utilization of the existing equipment of AMW and some repair amount which we spent on that. So we are anticipating this capacity of aluminum wheels to be hitting close to 80 to 85% in over next, maybe 7-8 months, wherein the thought of adding up aluminum wheels capacity is going underway. I think by next quarter, a lot of clarity will come in terms of timelines and money to be spent on that and what kind of capacity we are adding. Similar ways, knuckles is where we are having close to 500,000, say, for this financial year. Another 500,000 will be needed in next financial year, where discussions are ongoing with the government, with the customer for the timelines and the money to be spent. So I think these are 2 areas where we are looking out for capacity addition.
Okay, so that was helpful. And one more thing on the export side, apart from US, how is the demand situation in Europe and other geographies for alloy wheels, and how is the customer preference or from our supply point? How are they
Europe. So I think, Pranav, would you like to take the details in terms of percentage and all that for the European side?
Yeah, please. Just hold on. So in H1 FY26, our US market of overall export is 44%, 52% is for Europe, and 4% is rest of world. And in FY25, 64% is in US, and 32% is in Europe, and 4% in other countries. So we gradually increase our share of European business from 32% to 44%.
Okay. And demand is good over there as well, or how was it?
The demand side is fairly stable in Europe, given that old customers and no tariff situation or anything of that sort. I think aluminum wheel is ramping up nicely. There's two programs with the European OEM has already started on the aluminum side, and we anticipate two more programs which are going to be starting in Q4 of this financial year, if everything goes right with the customer testing and everything. And in terms of new awardings and new pipeline, which is going to be visible in next financial year, is also very strong, with four programs from the European OEMs already awarded to us, where program development and tooling development is underway. So European side, there is no problem. I think the situation remains very fragile in US, where solutions are being found.
So for next year, exports, you might see the growth back again, sir?
It is very tough to say. I think at the beginning of the year, we clearly thought that we are going to be hitting 600 to 650 crores. I mean, we have lost 50 crores in one quarter itself. So propagating that to 4 quarters will be 200 crores. It is very tough for us to compensate this 200 crores from the European side. But efforts are going on, given that you do not know what kind of shape this tariffs will take. So business wins in Europe is being focused. Business wins for alloy wheel is being focused. And just in case something doesn't work, at least we'll try to see if we can make up for the lost ground in this financial year, in the coming financial year.
Okay, that was helpful. Thank you.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question comes from the line of Prachi Sharma from Ace Investor. Please go ahead.
Hi, sir. Good afternoon. So just wanted your view on the domestic auto industry, since we know that we are seeing strong recovery supported by GST 2.0. So how do you see the demand trends across your key customer segments? That is one. And also wanted to get your answer on the planned capex for FY26 for alloy wheel, knuckles, and the backward integration facilities that we are focusing on.
So I think I'll answer the first question, and the second question will be answered by Pranav. So the first question is about the industry. I think it is a welcome step. I think that it is visible from the festive registration which has happened during the Diwali festival. The mood is obviously it has slowed down a little bit because festive is festive, but the momentum is continuing for all the segments. Two-wheeler being the best, given that affordability hits the most in that segment. Cars also are visualizing an 8 to 10% kind of a number on the uptick side, and we are fairly optimistic that this will continue for another 2-3 months. Till that time, the excess demand which got generated because of this benefit to pull the people on the sidelines to be coming in. Plus, there is an added advantage of tax saving which the government announced in terms of the budget, which is also helping. Tractor segment, because GST has also lowered for those equipments, so it is also going to go good. Despite some of the negative impact being taken up by the floods on the northern side, were taken up and were compensated by the GST impact. CV side is the only side which is very flat, and it is not seeing a very gungo kind of a situation, which has its own reasons, maybe because of the competition with railways or something that I said. So I anticipate CVs to be turning maybe a plus 2%, which was anticipated to be flattish or minus 2% for the financial year. So amongst all four segments, CV is the least positive, and rest segments are fairly, very positive. On the CapEx side, I think Pranav will answer that.
Yeah, in H1 FY26, we already done CapEx of around 115 crore and expected to close this year with a total CapEx of 250 crore, which will be majority in alloy wheel and the knuckle segment.
So, any percentages on how this is going to be allocated between alloy, knuckles, etc.?
The major portion is in knuckles because we are expanding our knuckle plant from existing 2.5 lakhs to 5 lakhs. And then alloy wheel, we are also expanding from existing 4.2 million to 5 million wheel rims.
Right.
Right. So I think roughly you can take around the 40%, 40 to 50% in knuckles, and that's 30 to 40% in alloy wheels, and balance in general maintenance CapEx.
Got it, sir. Thank you, sir. I'll get back in the queue in case of any further questions. Thanks. This was helpful.
Thank you, ma'am. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question comes from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Namaskar, sir. Thank you for the opportunity. Sir, firstly, can you once again repeat what was the knuckles contribution to the revenue for the first half? The turnover?
It's roughly 33 crore of the overall revenue.
Okay. And what is expected from H2? Depending upon our execution ramping up also in the order book?
I think in the balance 6 months, we are anticipating another 38 to 40 crores worth of revenue. So I think we anticipated around about 75 to 80 crores worth of revenue in this financial in 25-26 at the beginning of the year. So we are very, very close to that. There are 4 programs which we are running, and there are 2 programs yet to start. So in next financial year, we anticipate that this capacity anyways will be fully sold out, which is 500,000, which can generate close to 100 crores to 110, 115 crores based on which product gets sold. And then capacity addition, as I said, is under discussion with the customers, which will seek production output from September or October 2026, which can be additional of another 15, 20 crores for the balance, maybe 4 or 5 months. So this is what the projected numbers that we are trying to think as of now.
And sir, what has been the net long-term debt or the net debt number as on September? Our current maturity for the remaining half of the year, what should we end the year with?
So the remaining majority for the next half year is around 40 crore. So currently the total debt is long-term and short-term debt. Total is around 902 crore, and we expect to close this year with a total debt of, I think, around 950 to 960 crore.
Okay. And 40 crore is the repayment. That is the current
40 crore is the repayment. We are taking a fresh debt in the second half for that knuckle expansion.
Okay. And that you have outlined at what is the figure, sir? I missed the number for knuckle expansion. What will be the capex?
The overall capex for the knuckle up to 5 million is around 130 crore.
Okay. And up to 5 million?
Up to 5 lakh, 0.5 million.
1.5 million. What is the existing capacity in million?
Existing capacity is 0.3 million as of now.
Okay. So when we look at
I'll add up to this, what Pranav said.
Please.
So existing capacity of 0.3 million will first get to 0.5 million. So there will be a capex which will be needed in balance 2, 3, 4 months. And then additional 0.5 million, which is getting discussed with the customers, wherein if the customer gives us a go ahead today or tomorrow, maybe it will be done over 15, 20 days. Then that additional 0.5 million will also entail the capex, which will also fall into this financial year, which is what I think Pranav said, that for that 0.5 million, the total capex is going to be 130 crores.
Okay.
Yeah?
So the total, then the net capacity, total capacity needs will be 1 million.
Yeah, it will be 1 million, which will come into effect from maybe September or October 2026.
Okay. And the peak revenue from the 1 million would be, sir, what?
Around about 240 to 270 crores based on product mix.
Sir, when we look at your closing capital work in progress balance, that has also gone up from 288 crore to 406 crore. If I remember rightly, sir, previously हमने ऐसा गाइड किया था कि we are done with now the capex. Correct me there. तो अभी क्या हमारा trajectory रहेगा in terms of the uncertainties relating to the US tariffs? There's then the downward trend in the profitability also. आप कैसा देख रहे हैं? What constitutes the major consequence of this 406 closing balance?
Okay, so I'll tell you that within the capacity will say end up at 5 million. The capacity has capability issue also. So what is happening right now is that within the business, the existing type of wheels are getting converted into a newer technology, which is flow-formed wheel. So capacity remains at 5 million, but customer says, no, I don't want lightweighting from the normal process, but I want this from this German process because it is getting highlighted and now it has become a brand. So we also want those kind of capex to be done, wherein the capacity remains at 5 million. But to add 1 million of flow-formed wheels within that 5 million, I need to spend close to 88 to 90 crores. The customer pays me as an additional price, which is to cover my cost of capex over maybe 5 years, 6 years, 7 years. But although I don't need the capex, but customer says because this capability is not there when I am exporting these cars to Indonesia or Brazil or any other Asian and European countries, you have to compete with Chinese or you have to compete with European cars. So to get this strength, you have to get this technology. So these are some of the reasons where the capex is being called, which is not adding capacity but adding capability. Correct.
So sir, 405 minus 80 is clear. So
this is one. Then second thing is on the paint shop. The paint shop capability is also being asked now that suddenly there is a demand of tinted kind of wheels, which is not heard of in the country and it is only heard in US. But because Mahindra is having a subsidiary in US, they are exposed to that market and the trends. So they say what is popular in US needs to be brought to India. So once this comes in, another 30 crores, people are asking that, okay, you put up this paint facility also, because I think my car should have it first before, say, a Tata Motor builds in or a Maruti builds in. And tomorrow, if Tata and Mahindra, Tata or Maruti or Renault, Nissan or Hyundai also ask, we need to another further spend, capex for bridging this capability gap. So such kind of activities are building the capex activities, which are, I'm not saying that they are not needed, but it is for customer delight and customer has to compete in the market. So we have to do that.
Okay. And anything particular on the balance amount, sir, you want to allude to?
So I think within the, capex, the capacity is getting added. And as I said, and Pranav added that we are going to be doing close to 135 crores of capex, which is for the existing capacity addition for knuckles, for aluminum wheel capability building, and some capex for the new knuckles and aluminum shed, which we are trying to build up for maybe 1.2 to 1.5 million of aluminum wheels and maybe close to 500,000 of knuckles in balance 6 months.
Okay. And when will you see the conclusion, sir? When will this all projects get capitalized?
See, I believe that in March, close to 350 crores worth of capitalization should be doable, given that what is the trajectory and our completion time and our handing over time. This is what I feel like.
Okay. And lastly, sir, we are done with H1 and that has all the unforeseen element of the tariff impact. So taking today as into consideration and the plan B or the exposure toward the European market, जैसा आपने पहले भी allude किया, how should we look at H2 in terms of the revenue and the margin profile?
See, from the domestic side, I am fairly confident that it is going to remain as it was in the month of September, October, and the things are good. Festive mood was okay. It was a peak, and it has tipped a little bit, but yes, YOY it will be better. But export side, I don't see any situation, at least for these 2 months, where there is no clarity from the government, and maybe now government has expanded the credit guarantee program, so they are buying time for another maybe a quarter. So US exports, I believe that they will remain like this unless until some ice breaks and you remove those tariffs, right? So I think this margin profile will remain same in this context, given the fact that close to 50 crores worth of quarterly US revenues are gone, which are 14, 15% or 13% kind of a margin. So we will go into that 8 to 10 crores worth of deficit because of the current situation. Once it comes back, this 10 crores will get added up and efficiencies will also improve to improve the EBITDA.
Right, sir. And if I may conclude with, so we were looking for European acquisition earlier. Our MD in one of the call, I think, did mention about we also looking, and those players are also looking for us to get acquired by us. I think so Mr. Dheeraj Garg commented on the same 2 or 3 quarters ago. So what is the status, and correct me, sir, there whether my information is correct or not.
So I think there are multiple European wheel makers, be it aluminum or be it steel. The opportunities are always on the trot. There are I think 4 factories which were into IBC or bankruptcy code were sold in competition to many of the wheel makers from India or from the global platform to Chinese. And there are still 3-4 opportunities which is from aluminum to steel wheel which are there, where collaborative efforts are under discussion for having some kind of a collaboration where outright purchase is not being thought of. But I believe that is not a core area where we are trying to grab them. Unless until it comes at a very steep discount to build capability, it will be, it will be considered. Otherwise, I think Indian capability of matching the cost is not there in the European side. So I believe that we are interested on an asset which is worthwhile at a very deep discount, else India is good enough to compete with them. And this trajectory for European region will continue to hang over their heads because of their inability to compete with the Asian side.
Ladies and gentlemen, as there are no further questions for the participants, I now hand the conference over to the management for the closing comments. Thank you, and over to you, sir.
I hope we have been able to answer most of your queries. We look forward to your participation in the next quarter. For any further query, you may contact SGA, our investor relation advisor. Thank you.
Thank you so much, sir. On behalf of Anand Rathi Share and Stock Brokers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.